All right, welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour is a so-called everything rally in the cards for these markets. We will discuss with the investment committee. Stocks are trying to extend their record highs today. Joining me for the hour, Josh Brown, Joe Terranova, Jenny Harrington, Jim Lebenthal. We'll take you to the markets here, show you what we're doing. We are red across the board. Gold's up 4,000 first time. Bitcoin's been rallying. We've had the S&P at new record closes, and there still is a lot of talk, Josh, about whether there's an AI bubble or not. Ken Griffin talks about a sugar high today. He is the one, of course, a week or so ago, whenever that was, right on this network, which said there's echoes of the dot-com era. Paul Tudor Jones was yesterday on this network. I think investors are really seriously trying to get their arms around both where we are and where they think we're going from here.
Yeah, of course there's a bubble, but we don't know how early in the bubble we are, because a lot of the people who are saying bubble today were also saying it in 2023 when NVIDIA quadrupled. So it's really difficult to know who to listen to. It's all subjective. I won't be the one that can tell you exactly when it's the end or the peak of the sugar rush or whatever. But obviously, anytime you have an environment where there's this much enthusiasm for a new technology, and there are literally trillions of dollars being spent, not all of that spending is going to have a nice ROI at the end of the rainbow. Some of it, in hindsight, will look back and say, oh my God, can you believe so-and-so spent X dollars to fund XYZ ridiculous project? It's inevitable. Everybody understands this. But that doesn't mean there aren't real projects that are going to have world-transforming outcomes. And it doesn't mean you should say, just because there is some speculative activity, therefore I conclude everything is speculative activity. It's very childish. So I think it's very difficult to separate out which projects are going to be the best. Even the technologists who are this close to the activity couldn't say for sure, and they're honest about that. So I think it's very important to focus on trend.
Let me, forgive me for interrupting you, but let's pull up shares of Oracle, because it's an interesting developing story as we have this conversation. And you could see a little while ago, these shares took a dip by about 5%. The information is out with a story today which says the following. I'm quoting directly from this story, and this is the reason why the stock is lower. Internal documents show the fast-growing cloud business has had razor-thin gross profit margins in the past year or so, lower than what many equity analysts have estimated. That could raise questions about whether the AI cloud expansions undertaken by Oracle and its rivals will affect profitability and sustain investors' expectations. So this really speaks to what you're talking about. But here we have, according to the information, and we're continuing to work on this, and we'll try and get you more in just a little bit. Nebius is down on this. You're looking at related names, really at a time where we are, as an investor class, sort of really trying to get an idea where we are. Whether there's a bubble, whether there's been too much spend, whether there's been too much speculation on what the spend will result in. And at least this story right now about Oracle is sending those shares lower. There's CoreWeave, which took a move lower on that as well. Josh, I didn't mean to interrupt you, but I don't want to sit on that as we watch that stock go down.
I appreciate you bringing that into the conversation, because that is exactly what it looks like when some air is let out of these types of bubbles. And the main point that I wanted to make, and I'll make it right now very briefly, so I know we have a lot to get to, is that not every bubble ends in a 2000 to 2002 style secular bear market that takes the S&P down 57%. That's not how most of the time these things end. Most of the time, you'll just see certain names blow up, you'll see valuations contract, you'll see a couple of years of sluggish share price growth as we digest some of the excess. It doesn't always have to be the NASDAQ down 85%. People think there's this binary thing where either the market triples or gets cut in half. And most of market history says otherwise. It's okay if certain people are paying certain high multiples for certain stocks, and then that ends. It doesn't mean all of us have to go through Great Depression Part 2. So there's room to say a lot of this activity is justified, while you can also say there are some people doing some insane things.
Yeah.
It'll all come out in the wash, and I think investors will be okay.
Joe, there have already, Jim, been some concerns in the marketplace about so-called circular investments. There was an NBC News story that I thought laid this out. Very easy to understand for people if you're wondering, well, what exactly does that mean? So NVIDIA plans to invest in OpenAI, which is buying cloud computing from Oracle, which is buying chips from NVIDIA, which has a stake in CoreWeave, which is providing AI infrastructure to OpenAI, right? You come all the way around the circle. AMD did their thing yesterday, right? That stock's higher yet again today. That stock just exploded higher yesterday as well, which only adds to the conversation about whether there's this massive bubble brewing in this space.
I think it's legitimate to ask the question. I don't think we're going to be able to answer it right now. To me, just based on history, being in the markets, being in business, this feels a little bit like it rhymes with the late 1990s, but not with 1999, more with 1997. I don't want to be blasé, but that's just what it feels like. Now, why do I say that? Because this circular revenue stream, which is a good way of describing it, at all stations along the arc does seem to have a positive ROI, return on investment. Yes, there are questions today. Let's face it that they are rumors, but they are questions about the degree of profitability, but we're not talking about losing money at any point along which this circular money travels. I am a believer in the velocity of money theory of economic growth. I mean, it's a take on Milton Friedman. It's usually applied to the economy at large, but I think we can apply it to the AI ecosystem, given how important that ecosystem is to the economy at large. And as long as this money is flowing and making profits along the way, which it is, we should be fine. Now, for a case like Oracle today, all right, here's a stock that's trading in the mid-40s as a forward earnings multiple. It's up 120% over the last 6 months. It's susceptible to have some air let out of the balloon, as Josh just said. I think that's a good way of stating it. You let a little air out of the balloon so it doesn't pop, and it actually sets up for the balloon to be expanded further down the line. What I'm saying here, just to summarize, feels like 97, not 99. Go ahead, Josh.
You want that skepticism. Thank God they're writing articles like that.
Agreed.
You want that because in the absence of skepticism, this thing goes parabolic. You're at like a Nasdaq 30,000, Dow 65,000. That's not a good outcome for anyone. And so far, as bullish as people are, we've staved off that particular concern that I would definitely share if we were doing that in markets. But the reality is not that. And when people point out things like IREN and CoreWeave, I just default to saying, look, man, these are not the biggest market caps in the stock market. They could get cut in half and the market could survive.
Let's put it another way, taking what you're saying. I mean, Oracle right now, 40 times forward earnings. When the bubble in Cisco hit, it was 120 times earnings. By the way, I looked the other day at eBay. I think that's one of your favorites. Back at the same time, it was 400 times earnings. That's what bubbles look like. Now, the 40 times is projected to go to 24 times for Oracle over the next 2 years. That is the question. Does OpenAI raise the funds, whether it's revenue or investments, to actually make all this cash come through the circle? That's the question that has to be answered, and it can't be answered by me or anyone, not today.
Let's bring in long-term guide. It's a 52-week high. I'm just curious as to whether that stock has taken any kind of a move lower. It obviously has. Again, this stock was up earlier in the session. It's just made a steady slide lower, probably as many of these AI names are being impacted by that information report. Palantir is up 7% this week. I don't think necessarily related in any way, shape, or form to this group of stocks. But as you see, intraday, please. That stock's come off its low as well. So it's the disruptors versus the disrupted.
It is, and I think why we feel uncomfortable about OpenAI is because it's a private company. And there's a degree of opaqueness to that, what the ultimate effect would be. So you're talking about a company that I've said all along, I believe will be $1 trillion valuation. It really, really needs, for the benefit of the capital markets, to be a publicly traded company because it has so much of effect on it. I think what you're seeing today when you talk about some of these stocks like Dell is exactly what you want to see in an environment where you believe, as I said yesterday, that the market can continue to march higher through the end of the year. You want to see a little bit of the relief taken off. You're seeing it taken off in the right places. Two names you could look at. Best two S&P 500 technology names year to date. What are they? Western Digital, Seagate. Why are they down as much as they are today? They're down nearly 7%, just because it's that relief rally. So I think the market's doing exactly what you believe it should be doing to work off some of that relief. And I think ultimately it works out well for us.
Let's take a look at shares of Adobe as well, which got a price target drop by 50 bucks at Mizuho to 410 from 460. Which is obviously considerably higher than where the stock is now. I haven't really come round trip with you on this since prior to earnings. You said if it wasn't an earnings report that you liked, you were finally going to sell the stock. You're still sitting in this name, as Mizuho says, from a market perspective. Sentiment around Adobe has been extremely negative. There's much skepticism over whether Adobe can defend its moat as barriers to entry and design continue to fall. Much of Adobe's historical strength has been built on the depth of its tools and the learning curve required to master them. But if Gen AI enables high-quality creative output without existing training, the value of that moat diminishes. So you're still sitting in this name, which has pretty much done nothing since its earnings report. So why are you still here?
Yeah, I don't like any of the words that are about to come out of my mouth, but I'm in it because it hasn't gone down, okay, Scott? And I know how that sounds, but let's put the perspective to it, all right? The last 9 quarters, the stock has outperformed in terms of its earnings expectations, and out of those 9 quarters, 8 quarters, it has been absolutely slaughtered after earnings. This last earnings report, it did absolutely nothing. I was surprised by that, by the way. I thought either it would get slaughtered again, and I'd say, no mas, I'm out, or it would finally be redeemed. But the skepticism is still there. That's why the stock doesn't go up even after the earnings results. As I said, it's actually longer than 9 quarters that have been better than expectations. You're now seeing earnings estimates go up, which is a change. So it's the combination of no bloodbath and earnings estimates going up that have me in it for now. The skepticism is still there. The skepticism is understandable. It's twofold. It's whether OpenAI, Anthropic, and everybody else is going to replace what Adobe does. And the second thing is whether artificial intelligence kills off the number of seats, the number of jobs that actually use Adobe. Again, till now, we have not seen those fears show up in the results. At some point, one of two things will happen. Either it will show up in the results or it won't, and the market will get respect.
So let me ask you a question. So you're waiting until the stock goes down to sell it?
Jimmy, you should just sell it.
I know, Scott.
You should just sell it, buddy.
I got it. So here's my final.
Like, did I wake up like on another planet today? Like,
well,
what's happening here?
Okay, but let's bear in mind that it is trading at about 16 times forward earnings for a company that has no debt, for a company that buys back shares prolifically, and as I said, that has outperformed in its earnings expectations time and time again. In terms of Jenny, I hear you. I should sell it, and I'll categorize it as quizzical.
Mine's more fundamental.
Hang on. I will say this. We're getting to year end. This is a stock that's down 20% year to date in an environment where there is an uptape. I may indeed sell this as a tax loss harvest. I'm going to give it a little more time.
Okay, let's go outside of tech before we get out of this A block. Look at the Homebuilders today. DR, KB, Pulte, Toll. Evercore has downgraded that group. They believe margins must bottom before the stocks can re-rate. We do not believe that this will materialize in the next several months. Take a look at that move in DHI, down 5%. You can cycle through the others. I'm sure that must tell a similar story, right? KB, Pulte, Toll, can we look at those? Guys, I bring this up in part because Jenny has made a move in Milrose Properties.
Right.
You bought it, MRP. What's the deal with this name?
So it's really interesting. It was spun off of Lennar in February, and it's a complex structure and a complex company, but the best, most basic way to think about it is a land bank. And so what Lennar did was basically say, hey, we've got a really high risk, high reward part of our business with high growth, and then we've got this other part that's, asset heavy, slow growth, cash flow oriented. Those are two distinctly separate kinds of businesses. So let's spin off the land into this land bank called Milrose. So where you stand is they've got thousands of acres of land covered in 10 different states, very well diversified. It's got a 9% dividend yield. It the objective of the company is to pay out all of their earnings, all of their funds from operations into the dividend. So 9% growing. They're off to a great start. Actually increased their distribution after their second quarter call a few months ago. Next one's coming up in a few weeks. Very, very well managed. It's a weird management structure where there's an external management by Kennedy Lewis, but we spent a lot of time on the phone with the management team getting comfortable with that. I think that external structure will keep a little bit of a valuation cap on this. But basically, what happens is they give Lennar and anyone else who wants to buy their land an option. So Lennar can say, hey, we know that it's cyclically not favorable to build right now, but we also know that it's a cyclical business and we're going to want to build later, 3 years, 5 years, 10 years. So we're going to pay you a small option in the interim. And then one day, we're going to take down that land when we're ready to build. So Millrose is able to really manage their portfolio because they're always getting this cash flow. It's a cool story. If you want to buy it, I would say use a limit so you don't run the shares up, do your own homework, and go online and understand the complexity of that structure. There's no way I can do justice to it, but a really high quality company.
Okay, a week ago or so, you teased the fact that you were buying a staple name, but you didn't want to reveal it then because you were still buying it, I think, right? Well, now you've sized the position to where you want it.
Yep.
It's Kimberly Clark. It's KMB, 52-week low today with a 4.2% dividend yield.
Okay, so this is not like, oh, Jenny has some huge edge or wild insight that no one else does. Kimberly Clark, Kleenex, Huggies, Cottonelle, Scott's, the most consumer staple of all consumer staples names. It's trading at 16.5 times earnings, a 4.2% yield. They really got rid of their international family care and professional business, and I think analysts haven't fully accounted for that. So JP Morgan put out a report, I don't know, a month and change ago, where they say, like, look, once we really figure out what the new numbers will look like, once that business is kind of off the books, there's some decent earnings growth ahead. And decent earnings growth for Kimberly means like 3 to 6%, not 15 or 20%. But they've got a price target of $144 on it. Stock's at, what, 122 right now. And I think in this environment, if there is wind that comes out of the overall market sales, if there is wind that comes out of the AI froth-driven area, this is where I want to be. A 4.2% yield, 16.5 times earnings, steady earnings growth ahead, maybe some upside as the analyst earnings revisions are revised up. Maybe there could be a little bit of multiple expansion. If the market does crack up a bit, this would be an obvious flight to safety recipient. So, yeah, not exciting, but solid.
I mean,
right?
Making money is exciting.
Are they building data centers?
You know.
Yeah, it's a pretty boring version of exciting.
All right. Hey, to each his own. All right, so let's do this. We got a couple other moves that we'll save. We'll still get to another one from Jenny. We got a new one from Joe. But let's take a break. When we come back, we have some investing lessons from a legend. Josh Brown, he just sat down with investing icon Peter Lynch. They talked AI. They talked a whole lot more. We'll get the key takeaways from that conversation with one of the goats of this business next.
How involved are you with AI stocks with your own money right now?
I have 0 AI stocks, and
Okay.
I literally couldn't pronounce the video.
All right, 0 AI stocks. That was, of course, the legendary Peter Lynch on Josh Brown's The Compound podcast. Lynch ran the Fidelity Magellan Fund from 1977 to 1990, averaging annual returns of some 29.2%. As you heard, he shared his investing lessons. Josh, what was your biggest takeaway?
I thought the most interesting thing, he said a lot of really interesting things, but the most interesting insight, and this is, I think, very apropos of the show that we do and the audience that we have, is that it's still possible to be a regular person, work a regular job during the day, come home at night, do some research, look at stocks in a way that professionals maybe aren't, identify winning products, find trends in your local community or amongst your family and friends and coworkers, and capitalize on them. He doesn't think that the technology advantage of professional investors or all the data or all the high frequency trading, he really doesn't think that that's changed anything for the typical viewer, let's say, of the halftime report. He still thinks people can and should embrace the risk necessary to produce big returns in their own portfolio and find great companies to invest in.
I'll tell you what, I love what he said about he cautioned against scorning all investment ideas just because a stock has already rallied. He talks about sort of after the first inning, right? Quote, sometimes you don't have to be in the first inning. I think that's such interesting advice, and it matches what I spoke about yesterday with the biotech investor, Michelle Ross, on Closing Bell, where a stock had gone sideways because she was in it and she was waiting for a trial to be finished to see what the event was going to be, obviously betting that it was going to be a positive. The stock had a straight up spike. And I said, so are you selling it now? And she's like, absolutely not, because this is just the beginning. And it's sort of the same point. Don't be afraid to invest in a name, according to Lynch, just because it's already had a significant move.
Yeah, and there are so many examples of that. And people told him in the 1980s he missed it, McDonald's was over. And then it went up tenfold. And, you know, that example we've seen with companies like Amazon, companies like Apple, an obvious example, NVIDIA, up 10,000% over the course of 10 years. You know how many people over the course of that 10 years said, you missed it, it's over. It just doubled. It just tripled. Stocks on their way to going up to 10,000%, which is rare, obviously. They go up 1,000%, and there are naysayers. So it's such a great insight, especially now, Judge. Look at where we are. Look at what this market has done over the last 15 years, 16, 17 years since the great financial crisis. It's been compounding at 12.5%. The NASDAQ even more. It's so tempting to look at that and say, that's it, I missed it. When in reality, it's just not the way the stock market works. Companies compound profits. There's multiple expansion. There are new areas companies get into and restart a growth story that maybe has been dormant for a little while. A lot of things can happen that we can't imagine. And I think it's really important to stay open-minded. I think Peter made a really key point for all of us.
Yeah. Well, congrats on getting that. He doesn't obviously do much publicly, so it's one of those gets, as we say. Yesterday, too, where he said, quote, we're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk. Gold has, quote, a life of its own. As you see sovereigns around the world, see central banks around the world, see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me. Josh, do you have a thought on that? Because that he's making a broader statement clearly by making those comments. Is Ken Griffin as part of the reason why people keep flocking to gold, and most don't see this run ending anytime soon.
Yeah, it's really bad financial advice. Consult with a financial advisor or financial planner before you put 25% of your net worth into a commodity. People need to forget. There's a lot of recency. People need to remember there's a lot of recency bias here, and people should not forget that, like any commodity, gold has boom-bust cycles. It's perfectly normal. Has unbelievable bull markets like the one that we're in right now. It's also had periods like very recently, topped in 2011, didn't get back to that high until 2021. That's an entire decade of no returns. In the meanwhile, stocks did really well. So it's not anti-gold. Not telling you don't buy some Newmont, don't buy some gold mining stocks, or don't hold some gold alongside some of your cash and your Bitcoin. I would not tell people not to own gold. I would say don't put a quarter of your liquid assets into a commodity, because if and when it does have its next lost decade, you're really going to be sorry, because to Jenny's point, there is no cash flow here. There's no dividend, there's no valuation support. It's only a function of whether or not it's in a bull market or a bear market.
Sure,
and I hope it goes to 5,000. I own it.
It's not so much. The bigger argument, the one that Griffin is making, is that whereas the dollar used to be viewed a certain way, people are shunning their view of it like they have, like ways they just haven't in history, and they're now looking at gold as a safer harbor asset than the United States dollar.
I mean,
until
it
it falls 20%.
depends on what the actual dollars
until it falls
behind.
20%.
Yeah, but it also depends on what the actual dollars behind that are. And I don't know these numbers. I don't know how many dollars are going into gold versus going into US dollar equivalents, if that's meaningful. He's bringing up, like, look, there's something big and existential here that we haven't seen before. So I agree with him on those risks. I will say one thing. On my part, I'm not advising a single one of my clients to put any money in gold. It doesn't make sense for their portfolios.
Okay, we're back. Take a look at gold today, above 4,000 for the very first time ever. Bridgewater's Ray Dalio today saying investors should have 15% of their portfolios in gold. Jeffrey Gundlach told me, what, a month ago? 25%. That's interesting from Dalio, right? Today is like the early 70s. He said investors should hold more gold than usual. Do you have a take on that?
From a reflection of momentum, it's clearly the strongest commodity right now. Gold and silver from price performance, it's validating that point. I do think from the standpoint of central bank policy, when you see central banks as aggressive as they are right now in adding stimulus, that is a time historically where you do want to own gold. So you have the fundamental and technical tailwind behind it. I don't know in a particular investor portfolio if 15% is the right number. It's, your portfolio is like your fingerprint. It's individual to you, but I do think you should not look away from some form of ownership of gold or silver.
You have a thought on that?
Yeah, so in a way, it's almost like how I like owning the MLPs versus oil as a commodity. I like owning the producers or the interim step. So we own Freeport and Rio, and those have some part of their businesses as gold production. I like being there rather than owning it. I think there's more utility for an investor and for a portfolio from an actual company that produces earnings versus just the commodity where you really are at the risk of other people's behavior and other people's emotions. There's no actual intrinsic value in gold. All you have is other people getting excited about it and bidding it up or running it down. I like companies that make money.
I mean, Ken Griffin talked about this at a Citadel Securities conference in New York yesterday, too, where he said, quote, "We're seeing substantial asset inflation away from the dollar as people are looking for ways to effectively de-dollarize or de-risk their portfolios vis-a-vis U.S. sovereign risk. Gold has, quote, a life of its own. As you see sovereigns around the world, see central banks around the world, see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me." Josh, do you have a thought on that? Because that he's making a broader statement clearly by making those comments is Ken Griffin as part of the reason why people keep flocking to gold, and most don't see this run ending anytime soon.
Yeah, it's really bad financial advice. Consult with a financial advisor or financial planner before you put 25% of your net worth into a commodity. People need to forget. There's a lot of recency. People need to remember there's a lot of recency bias here, and people should not forget that, like any commodity, gold has boom-bust cycles. It's perfectly normal. Has unbelievable bull markets like the one that we're in right now. It's also had periods like very recently, topped in 2011, didn't get back to that high until 2021. That's an entire decade of no returns. In the meanwhile, stocks did really well. So it's not anti-gold. I'm not telling you don't buy some Newmont, don't buy some gold mining stocks, or don't hold some gold alongside some of your cash and your Bitcoin. I would not tell people not to own gold. I would say don't put a quarter of your liquid assets into a commodity, because if and when it does have its next lost decade, you're really going to be sorry, because to Jenny's point, there is no cash flow here. There's no dividend, there's no valuation support. It's only a function of whether or not it's in a bull market or a bear market.
Sure,
and I hope it goes to 5,000. I own it.
It's not so much. The bigger argument, the one that Griffin is making, is that whereas the dollar used to be viewed a certain way, people are shunning their view of it like they have, like ways they just haven't in history, and they're now looking at gold as a safer harbor asset than the United States dollar.
I mean,
until
it
falls 20%.
depends on what the actual dollars
until it falls
behind.
20%.
Yeah, but it also depends on what the actual dollars behind that are. And I don't know these numbers. I don't know how many dollars are going into gold versus going into US dollar equivalents, if that's meaningful. He's bringing up, like, look, there's something big and existential here that we haven't seen before. So I agree with him on those risks. I will say one thing. On my part, I'm not advising a single one of my clients to put any money in gold. It doesn't make sense for their portfolios.
Okay. Quick break.
Airline traffic has been very good. Now we are flying blind, pun intended, in terms of TSA statistics, which I know you love, Scott, so I know you missed them. Nonetheless, traffic has been good. The problem is there's probably going to be a comment from Ed Bastian about the shutdown affecting the forward demand picture. Hopefully the stock market looks through that. It should, because the airline picture looks very good.
Why is the stock down 6? Would you just, can you put that back up, please? I think just can't look at it fast enough. All right, 6 months, good. Year to date, still not great. Why?
It never really fully recovered from that the Liberation Day fall off. The estimates, by the way, for this year's earnings never came all the way back. Frankly, I see that as an opportunity, Scott.
Why everything else has recovered well from Liberation Day? Why
it's
wouldn't
recovered
this?
Some. It hasn't recovered enough. I think. Let me just say one more thing, because you and I had this conversation, Scott, not that long ago about the back of the plane being maybe a little bit more empty. By the way, that's not corroborated by TSA statistics, and more to the point, it's the front of the plane that matters for profitability. We'll see if that comes true on Thursday.
Jenny?
But here's what I think on why it hasn't recovered. When we came out of Liberation Day, money flowed back in to the primary AI plays, the first derivative and the second derivative. And I would argue, Jimmy, that Delta in the long run should be a huge AI play. Like, that should really benefit their business. They should be able to upgrade systems and change the business, but it's not seen as anything touching AI. So I've seen everything that doesn't touch AI just take a back seat over the past 4 or 5 months.
You know what? They make a lot of free cash flow, a lot.
They've
been
do.
Paying down debt, and eventually they're going to buy back shares at this cheap price.
Okay, we'll take a quick break. Let's do finals. Josh Brown, what do you have?
Viva Systems last week was my best stocks in the market, looking for a breakout. It broke out, now above 300. Don't say I never gave you nothing.
We talked about Viva a lot this week, right? You have that.
Yes.
Weiss was bullish on that name.
Well, there it goes.
There it goes. Farmer Jim.
Pacific Gas and Electric, this is a California utility. It got unreasonably smacked down with the wildfires earlier this year. Its liabilities are nowhere near what the market feared, and it's got good momentum right now.
ConAg.
On theme with my boring consumer staples, ConAgra's trading at 10 times earnings, 7.5% yield. It just seems simply oversold.
You just love those staples, do you?
I do. It's a nice place to hide.
Yeah.
It's like taking a warm
I don't know
bath.
what
You
you're
don't worry
hiding
about
from.
anything.
All right.
You just know the money's coming to you.
Okay.
Dividends just chinking in.
Joe.
Natural gas prices moving higher recently. EQT is the way that you play it. I think we're hitting the restart button on the bull rally.
All right, good stuff. Thanks, everybody. I'll see you in a couple hours on the closing bell.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Tuesday, October 7th, and it's actually, let's see, what time is it? 5:33 p.m. As I'm recording this video, the market's closed. We can see what happened, right, with the indices here. In this, I'm going to talk about these in a second, but first, let me show you what stocks we're going to cover today. So we're going to look at the index ETFs, like the SPY, the Qs, the Dow, the Russell. We're going to look at the stocks discussed on today's halftime report. Not all of them, but a good portion of them, about 15, all listed over here. I've got some of the strongest ones highlighted with a little blue flag from a technical perspective, that is. Okay, so we're looking at the technicals. We'll be using Ichimoku indicator. We'll look at Apple, Tesla, Meta. I'll explain how that works. We'll look at the sectors, the strongest ones. We'll also take a look at 7 member requests. Okay, so let's get started here first with the indices. What happened? Well, markets were all down today. The Dow dropped, and at around 12 p.m., you can see here, it started to recover a little bit, right? But it still closed down 0.2. NASDAQ also dropped, right? And around 12 p.m. started to recover. It was down 0.67% for the day. S&P 500 also dropped and also started to recover, down 0.38%. And the Russell 2000 was down the most, 1.07%. How about the heat map? Let's look at that. Here we are. These are the individual stocks within the S&P 500. Consumer defensives were the strongest. You can see the green right there. A lot of the entertainment stocks like Netflix, okay, was up. T-Mobile. You can see utilities did okay. AMD was up 3.8%. Amazon was up 0.4%, but Tesla down 4.45%. Google down 1.74%. Oracle down 2.52%. PLTR, though, was up 1.47%. All right, let's look at the sectors real quick here. And you'll see that, yeah, as I mentioned, consumer defensives, they were the first, the top performer today, up 0.74%. Consumer defensives, though, have been basically haven't really done so well. If you look at the 1 month performance, they're down 2.76%. Could this be the turnaround for the sector? It's possible. If we look at the 3 month performance, consumer defensives down 2.56%. Half year performance, consumer defensives are up the least, just 4% for the half, where technology has been up 57.76%. And there's the 1 year performance. All right, let's see, it was only up 1%, right? That is terrible for a sector. So could this be the turnaround for consumer defensives? It's possible. We'll see. Let's take a look at the sectors. Okay, so let's see here. We're going to start off with the SPY S&P 500. Again, we're using the Ichimoku indicator, and we're using TC2000. So this is a great software platform. It allows you to quickly review your stocks or ETFs and assess the strength of the trend. We want to visually get a picture about what's happening. Ichimoku in Japanese stands for at a glance, and that's essentially what we're looking for. We're looking to see at a glance, or get a picture of the strength of the trend. Is it still intact? And the answer is yes. Price, which is these Japanese candlesticks, and this is the last one for today, which was down 0.37%. This candle is in fact above the green line, which is the 9 period, above the 26 period red line. Okay, the highs and lows of the last 26 periods divided by 2. The green line is the highs and lows of the last 9 periods divided by 2. Price is also above the Ichimoku cloud, which, by the way, projects also into the future, 26 periods into the future. And it's comprised of 2 lines, the Senku span A and the Senku span B. And then we've got the Chiku span, which is the closing price today, projected 26 periods ago. And as long as that white line is above the candles 26 periods ago, that is bullish. So everything here is giving us a very strong uptrend still, as far as the SPY is concerned. But we did have a down day, right? We can see here these last 4 days now, price is stalling. All right, the government shutdown is probably to blame a little bit here, because I think there's indecision here. We don't know which way to go, but it's all being held up still. Now, what about the Qs? Similar thing, right? Down 0.53%. Overall looks very bullish. Dow Jones, same thing, right? Down a little bit, down 0.19%. Overall looks very bullish on the trend on the charts here. Russell 2000 is also still holding up above the moving averages here, and it did pull back a little bit, down 1.07, but it did look. Notice where it stalled right at the 9 period, so it needs to stay above this level here. If it drops, it might also retest the Kijun-sen like it did over here in the past, and then usually it will bounce, but not always. And so that's when we know that things are starting to like maybe potentially fall apart. They might, sometimes it will drop under, but then you've got this other level of support as well, the Ichimoku cloud. So, you know, back here you can see the difference, right? Where once the price got under the Ichimoku cloud, everything started falling apart, basically. How about FEZ? That's the Eurostoxx 50. This one's pulled back as well, but still holding up above the moving averages. It's still in a strong uptrend overall. And so we'll see tomorrow what happens. The VIX today actually up 5.31%. Not a good thing for the market. It represents volatility. And when this, you know, I'm a little bit concerned that it closed inside the cloud. It has not closed inside the cloud here. You can see all those multiple times where it found resistance. And today was the first day where it actually closed inside the cloud. So that's a little bit concerning. The other thing I'm a little bit concerned about is what we're seeing here with the ADX. The momentum is starting to increase. Do you see that right there? While the positive DI is above the negative DI. If this was the case for a stock or an ETF, this would be a positive scenario. But with the VIX, it's the inverse effect, right? We want to see this dropping, not moving up. And so we'll see what happens, I guess, tomorrow, but it's not a good sign. Let's put it that way. All right, let's keep going here. Let's take a look at the stocks that they talked about. So like I said, I've highlighted the strongest ones at the top. So let's take a look at those first. Here's Dell Technologies. Let's start off with a weekly chart. What I did essentially is I reviewed every single one of these stocks. I looked at the weekly charts. I looked at the daily charts. And it was just these three stocks that passed the both weekly chart test and the daily chart test, which is price above the cloud and the moving averages on both time frames. And the answer is yes for Dell. In fact, with Dell, you can see that it actually broke through this high right here today. That's a good sign. All right, it might find some resistance up in these levels now, maybe around the 180 level, somewhere close to that. So we'll see what happens with Dell, but I like it. That's the weekly chart. Here's the daily chart. Okay, up 3.51% today. The cloud itself is bullish because we've got the Senko span A above the Senko span B. That's really important. Chiku span is above price. The Tenkan-sen is above the Kijun-sen. The green line is above the red line, and price is above everything. So that's key. All right, let's keep going. Now this is a reversal candle, but overall I like what I'm seeing because what happened today was it actually also took out. It got above this little resistance level. You can see that right there. What about PLTR? PLTR on the daily chart looks pretty good. Overall, it was up 1.47%. Okay, on the weekly chart, looks like I had this position back here. Got out back on August 5th, moved up slightly, and then it dropped. Now it's around the same area. Here's the weekly chart for Palantir. And right now you can see it is above the moving averages as well. So Palantir I like. VEEV, Josh Brown's final trade. By the way, this one also came up. Well, it was one of the stocks that I brought up in the weekend members only video. I always provide 20 new stock ideas. And so this was one of the stocks. And yeah, it's up 2.16% today. Yesterday it was up and, broke through this little box that you see right here today. So that's a really big bullish sign. It didn't happen on especially a lot of volume. You can see that volume today was actually lower than the prior day. So that's a little suspicious to me, but generally you want that breakout candle to have a higher volume bar down below. That represents more buying, more participants, more shares traded. That did not happen, but it did move up nonetheless. That's the weekly chart, and here's the daily. I'm sorry. Okay, I was looking at the weekly chart. So that's the weekly chart. This candle is still forming. So just keep that in mind, all right? So the weekly chart, by Friday, this could certainly just pull right back into the box, all right? I'm just saying. On the daily chart, we've got a reversal candle. We've got ourselves a spinning top. That's not a good sign. So it broke through. Yes, it happened on higher volume, but it also developed this reversal candle. If you're unfamiliar with that, let's take a look at the candle cheat sheet here. It's under bearish single candle patterns, and it's this one right here. The wick on the top is equal to the wick on the bottom. Small red body. Okay, not good. When you see this at the top of a move, after a move up, if you see the same candle, the bullish spinning top at the end of a pullback, like down at the bottom, that's actually bullish. That's not the case here. This is at the top of a move. So I'd be cautious here with VEEV, but I do like the fact that it got above some resistance levels. This is important. Where might it find some a resistance, or where would be a good target if you end up getting into this trade? 343.96. I'll explain why. Let's go to the weekly chart. We'd have to go back in time a bit though. So let's go backwards, and you can see the high back here. This goes all the way back to 2021. Okay. So it reached that level. 343.96 was the high on Friday, August 6th, 2021. That was the last point where it reached that level. So it's got some room to make it up there. It looks like if I measure from where the closing price is, it's another almost 11% move, potential move here. So I would, it looks like a good opportunity, honestly. It's also in the technology sector, which has been doing pretty well overall. Now, the rest of these folks, okay, there's something off. Maybe it's the weekly chart, maybe it's the daily chart, but the technicals, you're not getting a confluence in both time frames. And so let's take a look at those. Let's look at Adobe. Right off the bat, like I said earlier, what did I say? I said at a glance, which is what Ichimoku stands for. what do we see? We see price under the cloud. So what do you do in a scenario like this? I would just skip a stock like this altogether and just wait it out. And the reason I say that is because you want the momentum to change. The momentum right now is to the downside, obviously. We're in a downward channel. It's been declining here. And staying under these resistance levels. The cloud itself. How will we know when it's the right time to get back in? Generally, when price breaks above the cloud, like it did back here. You can see back in 2023, it broke above it on June 16th or whatever, moved up a bit. Okay, if we go back in time even further, I mean, we can switch it to a monthly chart. All right, and you can see whenever, right now, even on the monthly chart, it's under the cloud. So Adobe, not a stock I would be considering. It looks like it found a little bit of support down here. I did make this level, the 330.04. That's a double. It could potentially become a double bottom, which pattern, which is in fact a bullish pattern. However, it's not something that I would rely on. Okay, I want to see a little bit more evidence, right? On the daily chart, it's been moving up slightly, but it's still under the cloud. Okay. CAG, similar story. You know, this was Jenny's final trade. I understand. She's a different type of investor, right? She's investing based on, you know, she's looking for at the fundamentals, like the price of sales is under 1. Okay, I get that. And the sales growth, look at this, 1.38%. Profit margin 7.4%. But something like this, I mean, it hasn't even started to show technically that it's time to get in. Okay, maybe. I mean, this might be the bottom. It's possible, but why not wait for more money to start coming into this? We'll see this price pop above the cloud. Right now, it's not happening. It's stalling. Okay, that's why this is such a great indicator, because it will give you a little bit of insight on when it might be time to get in. From the top, from these highs back in, wow, it's been, all right, let's see. So the last time it was above the cloud was back here. That was back in 2024, October 2nd, 2024. And since then, it dropped 42.67%. And it could certainly drop some more. CRWV on the daily chart, inside the cloud, pulling back, no. Here's the weekly chart. Weekly chart doesn't look bad, but the daily chart is telling us it's a no-go right at this point. So if price is inside the cloud, also that means there's indecision. There's no true direction, neither bullish nor bearish. Okay. DAL, Delta Airlines, also inside the cloud. I'd hold off on this one. A bearish crossover took place over here. See the green line crossing under the red line? That's bearish. If you look at the Chiku span, remember the closing price projected 26 periods ago, the white line? That's underpriced. That's also bearish. If you look down below, I also have the directional movement index. The red line is above the negative, the negative DI9. The red line is above the positive DI9. I've got it at a setting of 9, which is a little faster. And that's not good. And then the ADX, okay, which is basically, it's agnostic, right? All that tells us is that's the white line that you see here. If that's moving up, the momentum is increasing, but it doesn't really care whether it's the red line or the green line. If the red line is above the green line and this is moving up, that's bad. It's telling us that there's more momentum to the downside. All right. If this white line is moving up, okay, and the green line is above the red line, like it was back here, you can see it popped, or over here, straight up, it moved up. Okay. All right. Let's keep going. DHI has pulled back and found some support. This is DR Horton Inc. Found some support at the cloud. It had that negative crossover here on the daily chart. So I wouldn't add a new position here. Certainly not. Okay. It might find some support around 158.17 as well. It still has one more layer of support down the bottom here in the 200-day. But right now it's looking pretty weak, if you ask me. And the daily chart, it actually took out this low. Okay. You can see that right there. So, you know, I'd wait and see what happens here. Here's the weekly chart for you. What about EQT? EQT Corporation, it's an oil and gas company. On the weekly chart, it is above the moving averages in the cloud, but we had a negative crossover here. The positive DI the Tenkinson, the green line, crossed under the red line. That's bearish. Everything else is good on the weekly. That's the one thing that's off. All right. Everything else I like. And on the daily chart, it does look good. So it's not perfect. That's all I'm saying. But overall, it's not bad. Okay. KMB, Kimberly Clark. No on Kimberly Clark. Unless you want to get stuck in this embedded downtrend here for a little while, possibly. MRP. Oh, I had a position in this back. I added it back on August 5th, closed out on August 27th. All my trades, by the way, are recorded, and I have, I basically post them daily, Monday through Friday, with for members, so they see when I add a new position or close out of a position. It's documented, and then I also do a review of all the trades that I place throughout the week in the members only video. Just real quick, guys. How do you see those videos? Whoops, my bad. I wasn't supposed to show you guys that. You become a member, and to access it, what you need to do is, well, this is where you'll find them, right? Member only videos down below. In order to view these videos, which are only available to members, not subscribers, but members, right? You need to click on the join button here. Hold on one second. Okay, here we go. So it's right next to the subscribe button. It's the join button. You click on this button here. This is what happens. It will pop up this little pop-up. You can select one of the 3 levels. Now, if you do want to see those member videos, you do have to either become a Blue Cloud trader, so you have to select that first, and then hit join, or Blue Cloud Legend, and hit join. Under Blue Cloud Trader, you'll see those weekly videos, exclusive member-only videos, once a week on the that I do at each weekend. Under Blue Cloud Legend, you'll also get the daily trade updates, which I post. Okay, it will pop up under posts, or it will also show up under a tab called membership. So that's how you access those. And if you guys like that cheat sheet that I just showed you a second ago, the candlestick pattern reference sheet, once you're on my Twitter page, which is at Blue Cloud Trader, okay, so on x.com, at Blue Cloud Trader is where you'll find my channel here. Select highlights, not posts, but highlights, and that will be the very first one at the top. Or if you scroll down, you might see that, and you'll also see this too, the stock patterns cheat sheet. These are really great resources to have, just to quickly, review. If you're like looking at your charts, you can take a quick look to see what the candle pattern might look like. It's not a bad idea to also memorize these. These are good to memorize. All right. Let's get back, folks. Okay, so Melrose Place. No on this one. I said Melrose Place. Melrose Properties, Inc. I used to watch a show back a long time ago called Melrose Place. Actually, it was a pretty funny show. All right. Okay, so MRP. Here it is on the daily chart. It's stalling at the bottom of the cloud. It might reverse here. It did have a nice bullish candle here. This is actually almost like a gravestone. It's called an inverse. I'm sorry, it's an inverse hammer after a move down. So let me show you that real quick. This is what it looks like right here. Inverted hammer, sorry. Yeah, single patterns after a pullback, long wick at the top, small body. All right. That's what we've got right here. So this could turn into something, and it even happened on high volume. It might bounce, but I wouldn't be jumping in here, okay, because it's still inside the cloud. MBIS. I had a position in this last week that I closed out of. I added it on September 22nd, closed out of it on September 30th for 12.8% profit. It moved up a little bit more after that, and then now it's pulling back and it's under the Tenkan-sen. So it was down 5.79%. Not a bad time to take profits if you're in it. On the weekly chart, it still looks pretty good, but it's you can see here it's starting to develop a bearish type candle. PCG, Pacific Gas and Electric Company, looking good. On the daily chart, because it did break through the 200-day moving average, we got a future bullish cloud here. Everything looks good with the directional movement index, positive DI above the negative DI, and ADX moving up, volume increasing. However, on the weekly chart, we're still in a downward. Well, we've got a series of lower highs. Like this one here is lower than the prior one. And this one is still lower than this one. We haven't taken out this high yet. We also have the Ichimoku cloud right They're waiting on the weekly. So it's up to you if you decide to get into something like this, but I personally wouldn't. RIO is Rio Tinto, basic materials sector, industrials, metals, minerals. I think Jenny likes this one. On the weekly chart, it's actually not looking terrible here because the cloud just turned bullish. Okay, you can see the Seiko span A crossed above the Seiko span B. Price is above the 200, above the moving averages, and the Chiku span is above price. But, you know, let's look at the daily chart as well. Yeah, the daily chart doesn't look bad either. I think my concern with this one is it's so early still, and you know it's been just zigzagging up and above for very short periods of time above the cloud and then dropping under, above and drop, creating a series of lower highs. But now we did in fact take out this area. It could turn into something, all right, but it was down 1.09%. Let's take a look at US dollar, the UUP. They talked about that quite a bit. It's showing a little bit of strength here. It was up 0.58%. Here, this is the weekly chart. Here's the daily, getting above the Ichimoku cloud, which is interesting, But it's been down for the year. It's still under this declining 200-day moving average, so I wouldn't really trust this yet 100% either. And then, like I said, on the weekly chart, we're still under the cloud for the US dollar. And look at that cloud thickening, which means it becomes a much harder cloud to get through. All right, next, Mag 7. Let's look at Apple. Apple down 0.08%, keeps stalling at that 260.10 level, right? Happened on Monday, happened again today. So it needs to break through that. If we have a bullish day for technology sector sometime this week, maybe it will break through, and then Apple will be experiencing all-time highs. Tesla, on the weekly chart, has been formed this reversal candle on Friday of last week. That's not a good one. Here's the daily chart. You can see it's now under the Tenkan-sen. So yesterday it was briefly above, and now it's back under. Not a good sign. Down 4.45%. All right, let's see what else. Meta is still under the cloud and under the moving averages. I'd hold off on Meta, even though it does seem to find some support at 691.20. So that's a really important support level I'd watch. Notice how it kept finding support there multiple times. There, and there. 3 times in a row and bounced off of it. But now it's finding resistance at 721, the 721.73 level based on that low. So, yeah, and it's under the cloud. So no on Meta. Let's keep going. I'm just going to go over the strongest sectors here. All right. I've got them highlighted with a blue flag. Let's look at copper miners ETF. Up 0.06% today. Not a whole lot. It did form a reversal type candle. Overall, the trend still looks very strong, obviously. Look at this. It's just straight up. Weekly chart, same thing. I mean, these do look like hyperbolic moves. I mean, certainly. And at some point, they will pull back. Hasn't happened yet, though. GDXJ, Junior Gold Miners ETF. Look at this one. Down 1.76%, but still holding up above the moving averages. There's certainly a demand. And Jenny, who's not recommending to her clients to be buying any gold, right? I think that's a big mistake, obviously, right? Gold has done remarkably well. If we go back to January 2025, look at this. From January 2nd of 2025, this ETF is up 129.26%. If we use technicals, they can help us, folks. They can help us. Look over here. It got above the cloud on this date right here, back on February 4th of 2025. Hasn't looked back. Has stayed the majority of the time. As you can see, maybe briefly came into the cloud here, but it's moved up 100%. So right now, this thing, yeah, it's obviously, bought quite a bit, but there's a reason for it, right? There's a little bit of fear, I think, especially from, foreign countries. They're no longer really looking at the U.S. dollar as a safe, harbor. I think gold it's taking its place. By the way, gold has been one you know, if you think about it, if you go thousands of years into the past, you know, gold is the one thing that seems to steadily always hold its value, right? Currencies can be manipulated, right? Our governments can, there's been hyperinflation that has occurred in the past, right? But there's a limited amount of gold. When it comes to the US dollar, there can be unlimited dollars, and they could completely flood you know, the economy with US dollars and make it worthless at some point if they chose to do that, or if they needed to do that because of the huge deficits that we have. So you know, the US right now is not in a good place as far as, you know, a steady place where, or a safe harbor as far as the US dollar goes. As far as that's the way I look at it, and that's why gold is moving up. So I think the host was correct in his assessment that he made. Okay, GLD. So here's gold right here. You can see this long extended. And by the way, why don't we do this? Let's take a look at gold. We'll look at it from a much longer perspective. Let's take a look at a yearly chart. Okay, this is GLD, the ETF. All right, it was incepted back in December. Looks like December 31st of 2004. Okay, somewhere around that time. So during that year, 2004, we are talking about 21 years. Now, in 21 years, okay, it's up 657%. That's a pretty remarkable move. Yeah, it did have, remember, like Josh was talking about how in 2011, you know, from 2011 until this date right here, it basically stayed, it was in a consolidation stage, right? And then it started to pop right there. That happened, let's see, what was that year? Looks like 2023. And then since it got above those levels there, it's moved up 90.3%. Okay, that's quite remarkable, I think. Anyway, and that's in a matter of, hold on, 1.8 years. We're looking at, wait a second. It's 3 bars, so basically it's 3 years. Okay, let's look at the monthly chart. There's the monthly chart for gold. I mean, skyrocketing right now. This is what happens. Let's look at the US dollar in comparison to that on a monthly. Ooh, double top pattern on a monthly. Not looking good. How about the yearly? You know, it's up 10.37% since 2007. Anyway, my point is, I think you get the point. All right, so let's get back. IBIT, Bitcoin, today was down 3.03%. So well, look, here's what happened. Look at the daily chart. Anything that moves up that quickly, okay, and then it gets far away from the moving averages, the 9 and the 26, just understand that this is like a magnet, guys. These moving averages are like a magnet. Price always comes back to it at some point. And so this might be just a healthy little pullback before it continues its move up. Now on the, if we look at the future cloud, the Senko Span A is above the Senko Span B right now on the daily chart. If you look at the weekly chart, very strong uptrend for Bitcoin still. So this is the IBIT ETF. What about silver? Okay, there's the weekly chart for silver, also doing pretty well. Here's the daily chart, pulling back a little bit down 1.52%, but overall holding above the moving averages. Okay, losing a little bit of steam here. You can see that from the ADX dropping a little bit. How about SMH? That's the semiconductor ETF. That one also down 1.84%. It looks like it's just holding up. Here's the daily chart. Here's the weekly chart. Again, this weekly chart, we're looking at 2 days for this candle, so it's not formed yet 100%. What about XLI? XLI looks good overall. It did create a bearish engulfing pattern, these two candles, down 0.57%, but overall the momentum is still up. And the weekly chart, that's what it looks like right there. Technology, XLK. Okay, this is the weekly chart. Looks okay to me. On the daily chart, pulled back a little bit. And so there's no breakdown happening here. But, you know, we got these 4 I guess, negative candles where price always has basically been opening up and then closing lower every day. Opens up, and that's why these are red candles, right? So if you're not familiar with that, just real quick, here's a understanding candles, guys. Take a look at that candlestick cheat sheet. Opening price, closing price, lows, highs is the wick of the price. Utilities, XLU on the daily chart. Look at that. Taking off. I like it. It's a little bit of a doji type candle. It's a reversal candle, but it's not, unless price gets under the low of that candle, I wouldn't be too concerned. We do get these a lot. We get some reversal candles. As long as it remains above the low of that candle, I think it's going to probably continue moving up. That's the daily, and here's the weekly chart. I like that weekly chart too. So utility is looking pretty strong here. Also took out this high. Okay, so we've got some. This is an evidence-based approach that we're using. We're using this indicator, Ichimoku, and traditional analysis. Right, higher highs, higher lows. We're looking at trend lines. We're looking at all types of things to help us assess what's going on. The rest of these sectors not so great, so that's why I'm not going to cover them. Got to keep this video relatively short. I can't make it too long. All right, now let's look at the members only requests. Members requests. So APLD, Applied Digital Corporation, on the weekly chart, it is up quite a bit from the breakout over here. It's moved up 185% in approximately 4 months. Very volatile, high beta. I would be very cautious with something like this. It's forming a reversal candle on the weekly. Let's look at the daily chart. Okay, so yeah, it's done pretty well, but it's holding up above the moving averages. You have to be very cautious with stocks like this that move that much. QUBT, and these you can see here, profit margins are negative. Quantum Computing Inc. Here's the daily chart, down 0.68%. Here it is in the weekly chart, looking pretty good. Okay. Overall, it's holding up. That's why it's got a blue flag. ETH, future bullish cloud, is looking good there. The Tenkan and Kijun are at the same level. Looks like it's going to cross up. We did get a bearish engulfing pattern though, so it might pull back slightly more. It might find some support at the cloud. That's about 3.5% away from where we currently are. That's Ethereum. That's the daily chart. Overall, it's just still a strong trend. Here's the weekly chart. You can see that it holding up above the moving averages on the weekly, and it moves a lot more. Ethereum it's got a beta of 4.17, so you're going to see big moves up and you're going to see big moves down. So just keep that in mind. I think with Bitcoin and these types of crypto type investments, these are more buy and hold. Just having a small portion of these and not really trying to trade them necessarily, or reducing your positions if it starts to look really bad. But these are more buy and hold, so you have some exposure. I think a small exposure. We're talking about like 5% or less of your total portfolio in crypto. That's my, that's how I would play the crypto investments. Anyway, all right, let's look at PYPL, PayPal. On the weekly chart, it is stalling right inside the cloud. That declining 200-day moving average is about 4% away from where we currently are. So it's probably going to hit its head there soon. I do like what I'm seeing here in the weekly with positive DI crossing above the negative DI, ADX moving up. Let's look at the daily now. Popping its head above the cloud. Now, the reason it didn't get a blue flag is because the cloud itself, the future cloud, is not bullish yet. Single span A is in fact moving up, but it has not crossed the single span B yet. And this 200-day moving average is declining. So it is possible that you might see it pull back again. Over here, for example, it was a brief little pop up above the 200 and then it dropped. So just keep that in mind. But overall, I like the volume that's coming in here. ADX is moving up. PayPal has a higher probability than some of the other investments. Okay, so here's ASNS. This is Actelis Networks Inc. It's the communication equipment. Let's look at this. This is the daily chart. So it was up 3.08%. It popped through the cloud on the daily chart. We don't have a future bullish cloud yet. It touched the 200-day back here on Friday, October 3rd, and dropped. Pierced it today and dropped. So it's finding resistance at that 200. Let's look at the weekly chart. It's still under the cloud on the weekly. So again, not something that I would be investing in because number one, it does have negative profit margins, but number two, it's under the Ichimoku cloud. So yeah, if you're trading this, I would just trade it on shorter time frames, probably like a daily or a 2 hour. Here's a 2 hour. You can see how it's performing there. Here's a 1 hour. Okay, holding up above the Kijinsen. It's very volatile though. All right, next one. Let's look at Buru, B-U-R-U, which is Nuburu Inc., industrial sector, diversified industrials. On the weekly chart, you can hardly see the candles because this is a 47-cent stock, okay, per share, 47 cents per share. It used to be, it was at a high of $563.62 back in 2023 and dropped about 99.92%. Now, I can see there's some volume coming in here, but it's so, see the price is so, cheap at 47 cents per share that it still hasn't emerged above the cloud. So I would steer away from that. Yes, it did break through, as you can see here on the daily chart. So I'm guessing that's why you're kind of interested in this stock, but very risky. I mean, just today it was up 84.62%. Okay, that's what you can expect with these types of stocks. But remember, anything that moves up that much in one day can also drop like 84% in one day as well. Like this candle here, it opened up at like 47 cents and then closed at 32 cents, which was approximately a 29% drop in one day. So you have to be really cautious. This is more, if you're into day trading, like a 5-minute chart. There's a 5-minute chart of Buru. This is what it performed like today. So, you could trade it like that, or 10-minute. See how, even on the 10-minute, the Ichimoku gives you a pretty good assessment of what's happening throughout the day. All right, let's look at AppLovin, because last week it created this shooting star reversal candle. Right? Let me show you guys that once again. It is right here. Long wick, small red body. After a move up, that's bearish. The shooting star. Okay, easy to identify. And then it dropped today. I'm sorry, this was last week's candle, that weekly candle. Let's look at the daily chart. On the daily, so let's see, Friday, when was Friday? Friday was right here on October 3rd. And then, so we had these little candles. It was holding up above Tenkan-sen. Yesterday, it closed underneath. Now, it is showing strength. We've got a bullish harami, this double candle pattern. So that is, in fact, a bullish pattern. It was up 7.64%. Let me show you that one. So we'd have to go under double candle patterns over here. And there it is. There's the bullish harami, which stands for pregnant. So there's the large body, the small body following it. Okay, bullish harami. And, typically this would be a red candle and this would be a green candle. And that's exactly what we've got right here, isn't it? So I think this has some potential here. It did, in fact, stall at the Tenkan-sen, though. Do you see that right there? So I'd wait. And if it can get above and close above, then it's got more potential to continue its move. On the weekly chart, it came down and basically is starting to show a little bit of strength, like I said. So I don't know. We'll see what happens with AppLovin. And one more thing, if you guys like the software that I'm using, it's called TC2000. You can get a $25 coupon through the affiliate link, which will be in the description section of this video. If you want to find it easily, you just go to the Blue Cloud Trading page, my YouTube channel page. And from here, if you click on 9 more links, right next to the join link here, you click on 9 more links, You'll see a description of my channel. You scroll down, and there's a whole bunch of links here. Check, run through them, check them out. And you'll find that $25 coupon right here. Just click on that. You enter your email here, and you can download TC2000. There is a price for it, software plans and data. You click on that. If you do biannual, you pay for it for 2 years. It's like $18.74 per month under basic, $37.49 for premium. I recommend the premium if you want to be able to draw on the charts, drawing tools and everything else. You can't get that on the basic, but you can on the premium. And you can also, they also have a brokerage offices, why trade with TC2000, opening an account, all that information is here. They get an 800 number. I love this software. I've been using it for many years, and I recommend it. I recommend it. And I am an affiliate. So that's one other way you can support this channel. Guys, thanks for watching. I will catch you all in the next video.